Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachortiz, and joining me is lead investment analyst Rafi Boyadjian. We'll be discussing upcoming Eurozone data and the potential reaction in the euro. So Rafi, we'll get flash estimates of July inflation and second quarter GDP on Friday. But given the current backdrop where virus cases are rising in some member states, how important will this data be?
Well, Maria, the data will be important in the sense that it's going to confirm the strengthening recovery for the euro area. We've seen from the PMIs that they were very strong for the second quarter and even for July as well. The growth momentum still seems to be there for most Eurozone countries. So we are expecting a rebound of about 1.5% quarter on quarter in Q2. And that should produce a year-on-year increase of 13.2%. So much improved picture given the double-dip recession that the Eurozone suffered earlier in late last year and earlier this year because of the renewed lockdowns we saw during the winter months. But as you said, the current backdrop has deteriorated somewhat. We're seeing a big surge in virus numbers in countries such as Spain and the Netherlands, and they're on the rise in France as well. But there has been some encouragement lately. Investors are looking very closely at the UK, where most restrictions have now been lifted, but the virus numbers there, at least on a weekly basis, they do now seem to have started to trend lower. So although it's a bit too early to get to draw too much into this, could be a sign that the latest wave will peak naturally and further or reintroduction of restrictions won't be required. Regardless of that, though, the outlook has been somewhat blighted compared to where things stood a few months ago, because this new mutation does suggest that we're not going to be completely virus-free for some time yet, and we're likely to continue to live with certain restrictions such as those on travel for some time yet. Now, as for inflation, we of course know that in the US, inflation is soaring. It's risen about 5%. In the euro area, it's still fairly tamed. It's expected to edge up to 2% in July. That would be bang on the ECB's target, although this number is expected to rise in the coming months. If we have a look, though, at the underlying measures of inflation, they are even more subdued they were 0.9% in June. So until we start to see a sustained upward trend in underlying inflation, the ECB isn't going to be worried about surging inflation like in the US, and that's going to give the ECB plenty of excuse to remain dovish.
Okay, so given all this, what reaction are we likely to see in the euro?
Well, if we were to get positive surprises, that should act as some kind of a support for the euro in the short term, because at the moment the euro is struggling to get a positive footing against the US dollar, even though the US dollar's rise has started to subside somewhat. But so if investors do feel reassured about the recovery, that could help in the very short term. But even if we were to see, say, if the CPI numbers were also to come in above expectations, it's not going to have too much of an impact in the beyond the immediate term, because it's not going to change ECB policy. In the bigger picture, the Fed looks almost certain to taper before the ECB, and after we had that ECB's strategy review, the European Central Bank looks set to keep rates in negative territory for longer, because it wants to see actual inflation rise sustainably to 2% before it even thinks about hiking rates. And that's going to weigh on euro dollar for the foreseeable future, possibly for the next 2 to 3 years. So the longer term outlook for the euro isn't looking particularly great right now, even if we were to see some short-term boost from the data.
Rafi, thanks so much. And thanks for joining us at xm.com.